I'm Charlotte McLeod with the Investing News Network, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Thank you so much for joining me online today. Great to see you again.
Likewise, Charlotte. Thanks for having me back on.
Yes, so today it's May 4th. We're speaking the afternoon of the latest Fed meeting. So there's a lot to go over. That's definitely where we're going to start today because this meeting has been a key point of focus in recent weeks. So we did get a 50 basis point interest rate hike, which was widely expected. The central bank also announced plans to reduce its balance sheet. I'm hoping that as we begin here, you can kind of go over what we saw and any main takeaways that you would highlight for investors here.
Yeah, sure. We've been talking about 50 basis points being baked in here. We thought that if they went 25, it would look weak to the market, and 75 was too much and would spook the market. So I think they delivered the number they needed to, and you saw that reflected in the broad market action afterwards, right? I mean, it really rallied hard in the last 2 hours of trading following the Fed's announcement, especially when Powell started to talk at 2:30 Eastern. So, our sector also got a bid, which was very encouraging. Gold performed well today. Silver actually reversed completely and finished, positive, which is really nice to see. It was really beaten up this morning, as well as the previous, 5 to 10 trading sessions. So hopefully that's more to come because silver catches up to gold very quickly sometimes. And I think you might see that kind of action now over the next, weeks that come. At least I'm hoping so. So I think we're going to see the Fed, try to walk this tightrope here for the next, number of months of trying to deliver that kind of down the middle kind of, verbiage or reasoning that they did today. And I think they did a decent job of that. So the takeaway for us, though, is that you're still looking at 7 or 8 hikes, expected for this year or this calendar year, and that's just ridiculous in our opinion. If they're going to continue to go 50, they're going to have to go to 25 on a bunch of those, in our opinion, or they're just going to have to skip a few because if you listen to Powell's comments closely, he mentioned a couple of times that they would leave their reasoning open to any outside events, and that is, I think he's talking about Russia for sure, right? It's like they'll use Russia as an excuse not to be overly hawkish if things go south there, and it's already been an absolute disaster for so many people. So
yeah, I think, that's quite key. We've been looking forward to this meeting and kind of expecting what will happen. And we did get what was anticipated, but it doesn't mean that, okay, you got this 50 basis point rate hike. It doesn't mean inflation is suddenly over, right? There's so many different things that are at play. So maybe you could also give us an update on how the Russia-Ukraine war is impacting, the precious metals sector and how that will continue to play into the market.
Sure. So, at Feneck Consulting, we have 2 portfolios. One is the mining portfolio that we're known for best. We've been doing that over 6 years. We also have an energy portfolio that we've done for the last 3 years or so. And energy is very intriguing. I like stuff that's going to pay a dividend in that space. There's a lot of good names you could buy that are not overly valued, I think, in my opinion, right now. But if you look at USO as a proxy for the oil price, it's an ETF out there, or UNG as a proxy for nat gas. Both have just been in a serious uptrend for months, and that preceded the Russian situation in January. So a lot of people think that's all Russia, and that's not accurate. It was really there before, and now it's getting exacerbated by what's happening with Russia-Ukraine. Nat gas was the dog of all commodities for so many years, and now it's in a serious breakout mode. And so we've been playing that through some micro cap and small cap, natural gas plays. But excuse me, the other commodity that's getting some love throughout this volatility is palladium, and that tracker would be PALL. Palladium is, heavily produced in Russia. It's over 40% of the world's production. So there's been a lot of gaming of palladium in terms of, where that market may be headed. And you'll see that in the chart.
Definitely. So with palladium, how would you suggest that people get exposure? Because that's a little bit trickier than, your typical precious metals like gold and silver.
Yeah. So I wrote on Palladium for Sprott. I have a real interest in that subsector of commodities because of the supply constraints, right? 41% roughly of production is in Russia, 42 or 43 is in South Africa. So when you look at the rest of the world, that only leaves about 17% globally. We only have a little bit produced in the US, some in Canada, some elsewhere, right? So it's really dependent upon those two countries. And what I've always said about it for probably 10 years plus now is that if Russia ever decides to get aggressive with exporting palladium, that's going to be a problem. That's factoring into prices right now. We don't know what Putin's going to do. He's unpredictable. But you also look at South Africa, and they have a history of striking every 9 to 15 months like clockwork. So I think in a rising commodities market, the unions over there may get more aggressive, and you're going to see some supply go offline in South Africa, right? And if that happens, then it's game on. It's really intriguing, but not mainstream, as you pointed out, like gold and silver are. I'm playing that through a couple of microcap names. Our largest position is Canadian Palladium, which is DCNNF. I may have mentioned that on our last visit. I'm not sure, but the reason I like it is because one of the trends we talked about last time, Charlotte, is we look for management that's been successful elsewhere, but at larger companies, right? So Wayne Tisdale built and oversaw Rainy River, which is now New Gold's #1 mine, NGD. So when you have hundreds of employees that are reporting to you and you're running about a 6.5 cent stock, it's intriguing to me that, that's still not on someone's radar. We identified a heavy short in the position last fall, which lasted pretty much the entire fourth quarter. It was a European hedge fund. And then it went away this year when palladium started to get better. And so the overhang on the stock, in our view, is over. And that's why we took a larger position. But we think that, like so many palladium names, over the next 12 to 18 months, these are takeout targets or joint venture targets for larger companies. There's just not enough of the metal to go around. So they're in the Sudbury area. If you look historically, PALDF was taken out by Sibanye SBSF at $1 billion just in 2019. So we're not saying this is $1 billion company by any stretch, but they have absolutely a lot more value than 6.5 cents US. Group 10 is another name that we like in palladium, but it also is a heavy nickel play, which a lot of people miss. The most recent reports are 45 to 50% nickel. So nickel prices have gone up exponentially here over the last few months. And I don't think the market understands Group 10 very well. I mean, their geology, their rocks are connected to Sibanyes in Montana. So when you look at jurisdiction, great jurisdiction, when you look at, producing mines around that little junior, well, Sibanye is producing a ton of palladium at Stillwater, and Stillwater is connected to Group 10's deposit. So it's like, what prevents a giant company like Sibanye from making a bid for Group 10 if the stock gets cheap enough, right? The board has to look at these things, constructively, and I don't want to see a takeout here at a 40% premium. I think the company's got a lot more to deliver. So, that's my biggest fear. Is a lot of people look for takeouts, but I look for, gosh, I hope this company doesn't get taken out here because I want to ride it a lot further and then get a payday down the road, right?
Yeah, of course. And thank you for highlighting those opportunities. I think that's a very interesting, different precious metals angle that people could consider. I want to also go over silver. So we started talking about how silver is doing today. And in our previous conversation, you mentioned some of the silver companies that you're looking at. Starting with the price, I know a lot of people have been disappointed with silver's price performance, especially when you compare it to gold. So for you, the current silver price level, does that seem appropriate? How do you feel about that?
Well, it is one of our top 5 positions. We own 10% silver and 0% gold right now because we aren't in the store of value camp. We're looking for upside to the prices of metal out there, right? But silver is so cheap, we don't mind owning it here. versus other commodities. But understand that I bought a lot of that at much lower silver prices, right? So we've been in the silver, market for many years. I haven't bought it recently, but I almost got filled on some today, pre-Fed. I think that it's been the most disappointing large commodity period end of story. When you look at ag, energy, metals, it's just been really, really disappointing. That said, we're looking to leverage that silver price with names that don't need $30 silver to do well, right? And so you have to look at AISC, which is all in sustaining cost per ounce. A lot of companies like that come to mind, like Silver Corp, SVM, mid-tier company. It's in, VanEck, GDX, and J. It's going to get some love as silver prices go up. There aren't many silver companies that are actually making money, and this is one of them. So, we buy stuff, not always the microcap stuff. We're buying mid-tier companies like Silver Corp because we feel this is a great entry point, right? They're 100% China, but what I would point out to people is they tried to acquire Guyana Goldfields I guess it was a couple of years ago now, and they lost that bid to Zijin. But they are, I think, through that they were trying to demonstrate that they're trying to diversify their risk, right, into other countries. And they have about 220 million in cash as we sit here right now. So, we look at that and say, okay, they're probably going to make some type of acquisition strategically down the road, and it probably is not going to be in China so that they can get more interest from their shareholder base, right? But you look at their AISC, excuse me, I'm not looking at any numbers, so I'm not sure this is completely accurate, but at the last I remembered, it was $8.80, which is really low. So again, at $23 silver, who cares if you're all in sustaining cost per ounce is 9, let's call it, you're making a lot of margin.
Yeah, and okay, so this kind of ties into one of the questions I like to ask people about silver stocks. So you're looking across the size spectrum, it sounds like. How do you feel though about, are you looking for, primary silver companies, or do you look for silver, gold? How strongly does a company have to be focused on silver for you to feel like you're getting that silver angle from them? Because I know that the primary silver stocks are pretty few and far between.
Yeah, that's a good question. If you look at CDE, Coeur d'Alene, that Core Mining that they call themselves now, they were heavy silver a decade ago. Now they're actually more gold than silver. So people need to look at that when they're looking at these 10-year charts and realize that the stock was way different in terms of their positioning a decade ago. So maybe we never reach those prices again that we saw, right? Because their composition was different. A few that we track and have owned over time are like AG, First Majestic, very heavy weighting towards silver in their portfolio mix. Silver Corp, we already mentioned, SVM. And we look at the microcap, sector as well. That is heavy silver. Two names that come to mind are Aftermath Silver, which is 23 cents right now. I mean, hit $1.37 last year US and is trading at 23 cents. I mean, they have two projects, albeit in areas of the world that are not the best jurisdictions, right now, but they're economic, in my view, doing our numbers at much lower silver prices once they get built out. And they're both, possible open pit scenarios. Again, we just hope that we don't get a bid on that stock at 40 cents tomorrow, because we'd be angry. We see the stock at 50 to 70 cents US over the next year. We don't see it at 40. So we're buying that here because it's completely bombed out, has a lot of leverage to the silver price. Another one is Golden Minerals, which is AUMN. I've mentioned this on a couple of podcasts recently because there is a Seeking Alpha author out there that's just getting the numbers wrong on this stock over and over. And it's very frustrating to see people believe that, when someone doesn't take the time to call the company directly and get information from the CEO or from management, I think they should be held accountable, and that's how we feel about this stock. It's continually been gyrating between a certain trading range, because every time we get some type of lift, it seems like this author will come out of the woods and come up with some information that to me is completely off base. So, we tried to take the other side of that trade, Charlotte, and, we put a huge buy order on the stock. It's, at 40.5 cents here recently. And we bought over 60,000 shares there to add to our position because we have conviction in what management is doing. We think they're going to restart their Bellardania mine. And again, if you look back at the chart in 2015, when they did that last, that was 7 years ago, the stock exploded. So we're not expecting an explosion in price, but we're definitely expecting the market to wake up to the reality that this stock has a lot more potential than people are giving it credit for.
Okay, okay. And of course, that speaks to the importance of continuing to do your own due diligence, which is something that investors should remember. So I also want to talk to you today about copper, which is another one where you shared some of your companies that you liked the last time we spoke, but we didn't get a chance to look at the market. So in copper, I find that where we tend to see attention is on the large projects from big companies, and smaller companies tend to not always get noticed. And I think that stems partially from the fact that people feel like it's going to take so long. Are these companies that are in the early stages going to miss the boat on, we've seen some interesting price activity for copper this past year. So what are your thoughts there? How do you approach, the copper stocks?
Well, if you asked me that 2 years ago, we were buying the larger kind of names, but now we've drifted down into the micro caps, just like we have with gold and silver, because that's where the value is. If you look at COPX, which is the large cap ETF for copper stocks, it's already run up, multiples. So we don't own it. We almost owned it today and yesterday. I mean, we have these limit orders that are away from the action, so sometimes we'll almost get filled. But we're looking to buy some here because we think copper remains in an uptrend. So we are heavily overweight, junior copper stocks right now that no one's ever really done a lot of research on. There's not a lot of coverage on. One that comes to mind that did get some coverage is Braveheart Resources, which is RIINF. Fundamental Research put out a piece somewhere between 35 and 40 cents as their target over the next year, and the stock's trading at less than 6.5 cents. So when you look at that, I mean, maybe they're wrong, right? Maybe it's not worth that. Who cares? Like if it's worth half of that, it's 17.5 to 20 cents. You're looking at a triple from here. So it's like very intriguing. They have some debt that they need to extinguish. That's been the overhang on the stock. I think they're going to get that accomplished. And they're copper and palladium, so it's two metals that I really like and follow closely. Another name that was surprising to me recently was Granite Copper, GCXXF. They came out with some really good news in March and got a brief move up, but have given all that back and then some. I mean, it's trading between 10 and 11 cents US right now, so I'm just perplexed as to why some of these copper juniors have gotten literally no bid. I think Tim Johnson's a good leader there. They just almost doubled their mine life in that March news. So when you look at that area, I always tell people, like I just mentioned with, for your listeners about Group 10, and look who else is around a deposit, right? And if you look at that, geography, there's much bigger players right there in Canada and near them in the Yukon. So, I think it's a really interesting play at this price level.
Yeah, and you mentioned positivity in copper moving forward. Maybe we could talk a little bit, just briefly, about some of the supply demand dynamics and what gets you excited about the copper space, because there's so many things going on there. So yeah, if there's anything that you would pull out for people to notice.
Sure. I mean, there's many good presentation decks out there that people can use to educate themselves. Like if you go to Freeport McMoran's site, FCX, they're a big player there. There's a lot of data that supports, the EV battery market, the infrastructure build out globally, just trying to think of the correct word, but there's a lot of interest in copper all of a sudden over the last 2 years. We got interested in copper in May of 2020, so we were really early to the party. And some of those stocks were our best performers in 2020 because they were just really underfollowed. So I just recommend to people to look at the commodity first. Is there interest in the commodity? Yes. Why is that? Well, there's a number of reasons, but some of it is just supply shortages, right? We're seeing that with copper for sure at the exchanges. I don't talk to a ton of traders, but I talk to enough to see that there is definitely a shortage of supply there, and demand remains strong, right? So when you have that supply demand imbalance, that's one of the first things that we look at as a portfolio manager is, is there an imbalance? Yes. Okay, then what names can I buy that are completely, unloved in the space, because we're a value manager, right? We're not going to chase FCX at, whatever price, 43, 44 bucks. We loved it at $6 to $10 and got out, and made a lot of money a few years ago. But we don't like it here because we see better opportunities in the kind of names I just mentioned.
Yeah, that makes total sense. So thanks for going over that. As we're starting to finish up here, I want to go back to our conversation last time and a question that arose about that video. So you talked to us about, the value of trading actively. And I
Sure.
think that something that came up is, so how do you decide if something is a long-term play versus something that is going to be, a shorter term opportunity for you? What factors are you looking at there?
So, earnings are a factor. I know that many people will just hold through earnings, and I think it's a large mistake, right? Why would you want to hold? Like, look at IAG today, right? IAG came out with news. Their Cote project is going to be way more expensive than expected. Canaccord downgrades the stock to underperform, and the thing's down 29% pre-market. Why would I want to stick around for that? We got out of 75 to 85% of our IAG way long ago, like weeks ago, because I see on my calendar the earnings things coming up, right? I don't see the stock trading really well. It's in a downtrend. So why am I going to risk it and hold, do this and be like, oh, I hope that earnings are good enough to justify my position. So we'll basically look at earnings. We'll look at things like I mentioned on the last show. The PFS from Cote is not just relevant to IAG. It's Argonaut. It's a number of names. Integra. Many of these companies have had really disappointing results in their PFS reports this year over the last 12 months, because commodity prices are going way higher, and the gold price is not going up exponentially. So naturally, you're going to have to spend more money, and you saw that again today with IAG. And I don't know why this is a surprise to people at this point, because Argonaut was December. I think Integra was around the same time. We've seen a number of companies come around in the last 6 months and say, "Hey, prices are going up. Like we're not thrilled about it, but here's the actual truth." And I commend them for not trying to hide it from investors. It's just you're going to get, going back to your original question, you're going to get a trading opportunity in a lot of names. So we're not buying and holding anything that's coming out with a PFS, because we have to be, unless we talk to management and get an idea that we're not going to get, really surprised with a large number, right? If the company's saying, oh gosh, it's only going to take us $50 million to get this thing restarted, and then, take it off care and maintenance, and then it's going to cost them for real like 130 million. Well, why would we want to be around for that, right? Let's let them put that news out and then buy the dip.
Yeah, you're right. We did talk about this last time, although I think it's worth repeating, because what I'm getting from what you're saying is, these are things that take discipline. And I think people often, they want to hold on and, see about what happens after the next milestone versus pulling the trigger before. So that's very interesting. I think that's all from me today, but if you did have any final thoughts on gold or on the general commodity sector that you wanted to leave people with, that would be great.
Sure. Thanks, Charlotte. So yeah, we started a commodities newsletter in July of last year. I haven't marketed it much, but we're going to put some marketing out there in this summer to talk to people more about it, because I really try to help the average investor that doesn't have, 7 figures to invest. That if you look at the average investor out there today, they're not able to partner with financial advisors like they did in the past, right? Because so many of them require at least 500K now to have a relationship with them. And many people don't have that kind of money, right? Especially when it comes to mining stocks. They may have 25 grand or 50 grand or 100 grand to put into our sector, right? So maybe they can afford my newsletter and not my other services, and that's great. So we started that like last summer to appeal to those people. Um, we it's a broad commodity newsletter, so we talk about energy, we talk about clean energy, we talk about other things outside of just metals, and I think people enjoy that because we're not just focused on gold and silver and precious metals, right? So I think it's important, whether it's my newsletter or working with me, just to try to align yourself with a professional that can guide you through times like this, right? So many people got derailed here, I'm sure, over the last month because the price action was super ugly before today's Fed meeting, right? But our largest holding was up 14% today in almost 2 hours. I mean, some of this stuff can really move fast, and if you're not positioned and sell, yesterday, you're going to miss a lot of potential, upside over the next, 1 to 3 years.
Okay, well, thank you so much for coming on to share about what you're doing. Great to see you. Yeah, thanks for being here. Yes,
My pleasure.
and of course, once again, I'm Charlotte McLeod with the Investing News Network, and this is John Feneck with Feneck Consulting.